Folks, good morning and welcome to Swing Trading Today. This is Bob Desmond over at the Contrarian Trader, where we teach our members how to trade the charts and not the hype. Because all too often we have the financial news media who are trying to influence traders rather than informing them, and that's what we're doing here. How do we do that? We do it with video analysis. We do it with engagement. And that's exactly what we're doing now. So let's get to it. What are we going to talk about today? What we're going to talk about is the pre-market activity. Why is it important today in particular? It's game day. It is election day. And you're going to hear, as you hear with most elections, that this is the election of a lifetime. Is it truly? I think it's important. Is it the election of a lifetime? I don't think so. You're not going to have an entire branch of the federal government, meaning in this case, we're probably going to lose the House of Representatives. I am no pollster, but that does not mean that we lose the Senate. It does not mean that we lose the legislative branch of government. So, will it be a mess? Yeah, if there's a change of the House of Representatives, you're going to hear a lot of the same but louder, meaning investigations, subpoenas, scandals. What does it mean for the market? In all probability, not much, folks. So let's begin with the pre-market activity. Then we're going to segue into some watch stocks and member stock chart requests. Let's get to it. It is at current 5:11 in the a.m. Eastern Standard Time. What you're looking at is the ES mini futures. And you can see that we bottomed out here on the 29th of October, rallied, and then we broke support on the 2nd. And we've been limping back up ever since. Now, this prior support level will now act as resistance if, in fact, we do rally. At current, we're down about 0.25 percentage point. But we are holding support. So at current, I'm a bit neutral on the S&P 500. In short, I will dare and say, unlike most of the know-it-alls out there, I'm not sure where we're going to close out today. That's me being honest with you. RSI lower high. The problem is that we are putting in lower lows now. We have broken down on RSI. This is a 4-hour chart though, right? So we can't, here's your breakdown. We can't put our bets down, our trades down, simply based upon a 4-hour chart. This is just implying how we're going to open up and how we might close out the day. Well, in short, we're holding support. We have resistance above here and here at 2764. The S&P 500, which really took it on the chin yesterday due to the FANG stocks correcting, or as I like to call them now, the social justice warrior stocks. You have the E-mini futures that are down 40 points, over a half percentage point on the NASDAQ. Folks, we're coming into a buy signal here fairly soon on the NASDAQ. Because despite the fact that I do not like the leftist political leanings of these companies silencing free speech, and I've talked about this for months now, and I said it's going to hurt these stocks. Search my videos on YouTube and on the blog. I've been talking about this well before they broke down. That goes for Amazon, Google in particular, Facebook in particular as well. I have been warning about this, and now the chickens are coming home to roost. That being said, a lot of damage has been done here, so it may be time to go buying some of these shares for a counter-trend rally. Now, we are, again, down on the morning, but we did break out here on the 5th, yesterday. We've been pulling around, bouncing, retesting the breakout point. So this support level in red must hold. If it fails and we break back down below it, and God forbid we break this line in green here, brother, look out below for this market. But as it stands right now, while we're down this morning, I'm optimistic to a certain extent. Why? It's that we're weak right now, but after the elections tomorrow, we may get a relief rally. Think about it. How much anxiety has this election brought about? What's the unknown of what these elections will bring? I think that traders are putting a little bit too much emphasis on the elections right now. I think there probably will be a relief rally as we proceed into the holiday season. I could be wrong. And how will I know I'm wrong? How do I know not to believe my own BS? I'll know because the markets will have told me vis-a-vis the charts, because I'm trading the charts and not the hype pushed by the financial news media. We're going to think for ourselves here. This 5-hour bar, which just opened up 16 minutes ago, just went green. It was down. So a very volatile session. Let's pick things up here. We have a lot to get to. Let's go to the US dollar. Now, the dollar sold off hard last week. It did close positive, but it was a bearish week on a technical basis, even though it closed up. So what we're looking at here is another resistance level forming right here. Let's make this green, because if we break out and above it, we could move on to higher highs here above the 97.20 level. If we fail, if we break down below this lower band of support here at 96, there's going to be a problem for the US dollar. Now, you're going to probably see, if the Democrats take over, maybe a rally in the dollar, but longer term, probably a bit of weakness, or just neutral. Why is that? Why is there such a jumbled mess of what I just said? The reason is that you may get a rally because a relief rally, or you may get a sell-off due to the anticipated spending by the Democrats, their demands, and it's going to be all social welfare stuff. Middle-class people, forget it. You're getting nothing. They're going to try to roll back the tax cuts, particularly those that are impacting those people in the Democratic-controlled states. California, my state of New York, Connecticut, high-tax liberal states where these tax cuts, because you now have a cap on your state income taxes and property taxes, where we're highly taxed here, and it's going to hurt the average citizen in the quote-unquote blue states this coming tax season, because people have no idea what's about to come and hit them in terms of deductibility of their local property taxes and their income taxes. So let's watch for a breakout on the US dollar. Again, if we fail and we begin to break down even to new daily lows, if we break down below yesterday's lows, we're coming down here to retest these support levels. We have lower highs. This is not a broken currency yet, but we're seeing some chinks in the armor. Take note, double top here on RSI, but we're getting higher lows as well. What's the game plan? We sit, watch, and wait. The markets will tell us which way the dollar is going to go by us putting on positions in anticipation of the US dollar moving higher or lower. Doesn't make sense. In short, folks, as I shared with members last night on Market Wrap, I think it's too late for the US dollar. I think that it's going down longer term. We have 22 trillion in debt. Blame both parties. Let's take a look at gold. Gold is moving higher this morning. We're off the session highs, but let's drill down here. You can see that it's a little bit too much. Okay. You can see that we were in a triangle formation, and that triangle formation failed. We broke down. We're now rallying back, and we're forming a bull flag setup. And here we broke out overnight above this resistance level. So if we get a breakout, which we already have, above this resistance level here, and a continuation move higher, we'll rally up to the 1240 level. The 1240 level is proving to be stiff resistance for gold. Now, we are long of the gold miners. We are bullish on gold, but I think that if the Republicans win, we'll probably get a sell-off in the gold names. Short term anyway. Again, it's all going to go back to, yes, there will be increased deficit spending. The question is, who gets the money? If it's more rat hole social welfare spending, you can bet the dollar's going to drop and the price of gold is going to surge. Clean breakout on RSI. Beautiful double bottom setup here. Higher low. All good stuff. Intraday basis. Looking good for gold. Looking good here. We're doing a retest of the breakout point right now. Again, we're only into 24 minutes of this 5-hour bar right here. Anything can happen, but we appear to be gaining strength on gold. Let's check out yields. Well, this is actually the 10-year Treasury note. So if the note is rallying, that means yields are pulling back. We were down yesterday. We are up this morning. We had a rough week last week, a very bullish week for yields, bearish week for the note, as you can see here, obviously. We are limping back now. Folks, were I a betting man, I would have to say, based upon the weekly charts, which I've gone over with members, most recently last night, I think that in all probability, yields are probably going to press higher. I'm not loving this rally on the 10-year Treasury note. Therefore, I think that yields are moving higher. And that will not bode well for stocks if we break out to a new 52-week high on the 10-year yield. Let's segue over and into the charts that we're watching and some member stock chart requests. Cal-Maine Foods. And William, if you're out there, I have your stock chart request. I'm going to be going over. It'll be the last chart. Cal-Maine Foods, bullish reversal day. We're hitting resistance here, but this is very close to a buy signal. RSI is rising. Volume a bit light, but it rose over Fridays. So this is a watch stock. This one has treated us well in the past. So we'll be looking to buy Cal-Maine Foods back. This is a very, very volatile stock, folks. So please stay small. No market orders, please. It's very thinly traded. All right, Golar LNG. All right, we opened up a position today on Golar. This is a weekly chart. We broke out last week. This week, a continuation move higher. And what really influenced me to buy the shares was the price action of natural gas today. And I went over it over the weekend, and it just gapped up higher today. We couldn't chase it, but it closed up. This is the UGAZ. It closed up over 24% on the day. So that hurts. But we have a derivative play on natural gas. So we have a breakout on a daily basis on Golar. That gives us exposure to nat gas. So I'm feeling good about the trade. Now, going back to a daily chart of Golar. On an intraday basis, if we make a new daily low, I would stop out. On a closing basis, if we close down below 28.50 per share, I would stop out. That would be a failed breakout. Now, volume today was outstanding. It has been good. So I'm liking the setup here. And we will be looking to add more, especially if we get a pullback and a retest of the support level and it holds. That would be a buy signal for me. So I want to buy more. I was kind of cautious today with the price action. But given the price action on natural gas and the breakout on a weekly basis last week and the continuation breakout this week, how to buy it. All right, MDRX weekly chart. We spoke about MDRX over the weekend. Extreme oversold stock. It closed up today, but it closed off the highs of the day. $10 per share at current is acting as resistance. Now, we did close above prior support at $9.80, which is good stuff. Daily chart. All right, so daily basis, we have higher lows on Stokes, and they're hooking up. That's good stuff. Now, as I mentioned earlier, we have $10 per share, which is acting as resistance. If we see another day of us holding support here and consolidating, we'll look to open up a position with a stop loss only a couple of dimes down below the lows of the week. We'll give it a little bit of room, but not much. Volume today was good. I still think that we could see a bit more selling pressure here. So no reason to go rushing in quite yet. I like the setup. I'm just not loving it. More to come. Now, when we're trading the extreme oversold stocks, please do not go trading the morning rally in these names. Because Carriage Services, CSV, we discussed it over the weekend, it jacked up this morning, and then sellers moved in, and they took it down. Yes, it closed up on the day, but a lot of people got suckered in here, and I think we're going lower because these Stokes are rolling over. I mentioned it over the weekend. And our edge is now gone, meaning we were at extreme oversold levels with RSI below 20. That's done. We're back above 20. We move to the sidelines. We'll still watch it, but I won't buy this stock until we go lower. Weekly chart. I think we need to at least retest support. And that's down at 1457, which has happened to be the low of the month so far. Another reason why you don't want to go chasing the rally in the morning, rail. It was extreme oversold over the weekend. It remains extreme oversold. This stock has no historical support below. So you have traders out there guessing as to where the bottom may be. We don't want to do that. The markets are going to tell us where the bottom is. How do we know that? All we're going to do is take a look at our 4-hour chart. And our 4-hour chart should send us a signal that it's time to buy. Now, we did get that signal here, a signal, but it wasn't a confirmation signal. This was what it would have looked like earlier today. Had you been tracking it and using your crayon to identify where we have support. So we flashed a bullish reversal bar. Then we broke out. But if you bought the breakout and you didn't wait to see whether or not we would close above this upper band of resistance, you got sucker punched. Because what this was a rally and then a reversal. Sellers took advantage of liquidity and they sold strength. This is commonplace. Had we closed above the support level, I would be singing a different tune right now. But as it turns out, we broke down below this reversal bar, this bullish key reversal, and it appears as though we're going lower. So one candlestick does not a chart pattern make. Please, let's allow for a breakout, and let's make certain that we close above resistance before we go putting on a trade. All right, advanced auto parts, consolidating nicely. We're looking for a breakout here. I'm tempted to buy it. Honestly, I would love to. The problem here is that we're so close to resistance, so close to the breakout point. Now, I may nibble tomorrow morning just to scratch the edge. And then I will buy more if and when we get a closing breakout above resistance. Why am I being a bit aggressive here? It's because I can't resist the Stokes. I can't resist the RSI. They're breaking out, higher lows, higher highs, all good stuff. That's what you want to see. So the probability of a breakout here is very, very good. Volume, outstanding. So I want to get me some AAP. Let's leave off with Will's request for BLT. Well, I'm not sure whether or not this is the actual symbol that you wanted. I double-checked. It is the symbol that was entered. But this is BHP Billiton London base. Perhaps you want that. And that's fine. I'll go over the chart nonetheless. So a big move higher today. Up over percentage point. I'm looking at the point gain. But really, it's not that big on a percentage basis. So we broke out. Last week, I think we really nudged out of this consolidation, this wedge formation. And now we're pressing higher. We don't have a new weekly high yet. I like the setup here, but I think we're going to get a pullback and a retest of the breakout point. So if you need to scratch the itch, you want to scratch the itch, I'd be okay with it. But I would wait because I bet you we're going to get a pullback and a retest of the support level. I would be a lot more aggressive if we close above 1709. That would appear to be a new all-time high. Actually, 1714 was. This is a beautiful chart. Beautiful. Let's bring up BHP North America. Similar, but not as nice as the London shares. We're right on the edge of a breakout here on the London Exchange. Really good. Nice chart. Daily chart. All right, so on a daily basis, we're hitting a little bit of resistance here at $49 per share. We're probably going to get a pullback, Will. And it's on that pullback where you'd want to look to open up a position. And that pullback would be a good thing because what it is a pullback to probably retest the breakout point. I think that if you get a pullback and a filling of this gap, which opened up on Friday, or actually Thursday, I think that would be a good entry point, assuming that we hold and we close back above the 200 period moving average. So I would buy the pullback here. I think we're going a lot higher on these shares, looking really, really good. The daily chart's very noisy, very messy stuff, but you can't argue with the quarterly chart. It's really looking strong. I think that within the next couple of months, we'll be breaking out to new all-time highs. And that is it for Election Day 2018, folks. Everybody have a profitable trading day. Please don't go trading the knee-jerk reaction, because it'll probably be wrong tomorrow morning to whatever the outcome of the election is. Be well.